What's going on, guys? Tony Ivanov here with another video lesson, and today I'm going to talk about the market conditions up to date and why I didn't place any trades. There were no real good setups that I could find. The pre-market was pretty slow, so I'm just going to break down each stock that was gapping up and why I didn't want to trade it. But first, if you didn't know, every single day I give away $25 and it goes to the random commenter of the previous video lesson, so we're going to do that right now. Had 71 unique commenters. Thank you all so much for commenting. I really do appreciate it. And let's see who won it. Make more videos about day trading on Binance. Sure thing, Matthias. Right now, it's not the best market right now to do day trading. Well, at least now it is. But the past few days, it's been really slow. But now that we had this big pullback, there's lots of volatility. And I'll definitely make a video probably I'll definitely make a video probably tomorrow of how I'm trading it right now. So make sure that you send me a YouTube message with your PayPal email and I'll send you that 25 bucks. So let's just bring up the gap scanner that we have on Trade Ideas. And let's look at which stocks were gapping up, why they were gapping up, and why I didn't want to trade them. So first, SPI. We had a bunch of stocks today that were gapping up based on blockchain news. But the bad thing is that a bunch of these stocks have already released blockchain news in the past. So once they keep releasing this blockchain news, it's not as important. Like, let's say that your friend, he does a backflip. The first time that you see the backflip, it's like, wow, dude, that was awesome. Like, do it again. But after the 10th time, it's not that spectacular. You've seen it before. Same thing happens with these blockchain news releases. If it's the same company releasing these blockchain news releases, then no one really cares anymore. The hype is gone. So that's exactly what happened with SPI. It did have a gap up, but you can see if you look at pre-market, had a huge spike and then it was just very choppy. So I didn't want to trade that. Next on the gap scanner was LIVE, I'm pretty sure. LIVE is $19 per share, too high priced for me. Next was LITB, same thing. They had blockchain based news, but they've had blockchain news before. So I wasn't really, too hyped to trade it because it's the same thing as the previous stock where it's not that huge of news. And you can see had a huge run pre-market and then it became very illiquid and then it just collapsed. And it was basically like that all down the list. Next was Mara, MARA, same thing. They had blockchain news, had a huge spike pre-market, but then market open, it was selling off and just tanked and then did nothing all day. The one good stock to trade today, it would have been GNC. But GNC has a huge float of around 70 million shares in the float. And if you know my style of trading, the stocks that I trade are usually less than a 10 million share float. So, like, I saw this gapping up, but I wasn't really too hyped to trade it. However, if you did trade it using my pattern of buying the breakout over pre-market highs, you would have been successful. You would have made around 20% on this stock. So, I'm not really that mad that I didn't trade it because I stuck to my rules, and my rule is not to trade huge floats. Well, that's one of my rules, at least. So, kind of sucks that I missed out on this play, but in the bigger picture, I'm glad I stuck to my rules because more often than not, these huge float stocks, they do not move fast at all. This was just the reason why this moved is because it's a January effect play. If you look at the daily chart, you can see this whole year it's just been selling off, and the reason why it's spiking up now is that less investors are using their losses using their losses towards taxes. So there's less sellers in general, and when the buying pressure comes up, it shoots up, it squeezes the shorts, and has a nice gap up. No other reason for it to run other than that. And then, you know, towards around half hour after the market opened, we were having a bunch of these stocks, these low float stocks, doing these quick spikes up, but they didn't have enough buying pressure, so they just fell right back down. And once I saw that happening, I knew that it was not the day to trade, so I called it a day, and I didn't place any trades. So let me just look at a couple of those stocks. I have a list of them right here that had those quick spikes. One was AYTU. AYTU had a really bad spike. You can see not that much volume, and then when it spikes up, it just sold off right away, and then got extremely illiquid, extremely choppy. Same thing with LEDS. I'm pretty sure LEDS did the same exact thing. This had a bigger spike. Actually got halted. I didn't see this stock. Got halted and spiked up even further, but after the first 10 minutes, it just, you know, it was very choppy the whole time, and then it just crashed down, sold off, and it became very illiquid. Next was USEG. It did the same exact thing, where it had a quick spike, no buyers were in it, and then it just sold off right away. Next was yen. It did the same exact thing. You can see there's a pattern happening here. Whenever traders are really bored and there's no stocks trading, there will be these low float spikers that they try to spike up, they try to bring the hype, but no one's really down to trade it, so it just sells off immediately and then becomes very illiquid. So one of the biggest things that we have to do is watch out and not get trapped in these type of plays. You have to understand when the market is slow, and the way that you can do that is just by looking at your gap scanners and seeing, is there anything really worth playing? And if there's not much hype, not much volume in the overall market, then you can just kind of assume that it's not the day to trade. You don't have to trade every single day. I know that when I started trading, I really thought that you have to trade every single day. You have to always be trading, but that's really not the case. 80% of my profits come from 20% of my trades. So you have to think about that. 80% of my profits come from 20% of my trades. That means the biggest trades don't happen that often. So if you have the ability of not trading every single day and only trading when you have that the prime time pattern, then you will maximize your profits and minimize your losses. Don't trade every single day. If you don't see any solid setups, save your money, save your capital, wait for the next day. There's always another day in the markets. There's always more stocks to trade. I'm pretty sure the stock market has like 20,000 stocks listed on it. So if you miss one spike, no big deal, move on and wait until the next one and be prepared for the next one. That's the most important thing. So not that many lessons for you guys today. I'm sorry about that. Hope you learned something from this anyways. If you did, leave a like, leave a subscription, leave a comment down below, and I'll see you guys in the next video.